The coronavirus helping create a dismal day on the financial markets. The Dow has its worst point drop ever. A steep slide even triggering the first automatic halt in trading in over 2 decades. Our Madeline Anderson joining us here in the studio with more on what you need to know to protect your money. It's been quite a day, Madeline.
Yeah, Mary, experts say don't panic and don't make any decisions now based on emotion. Instead, consult with a financial planner about what will be the smartest move for your specific situation. Coronavirus fears hit the stock market for another week. The Dow plummeting more than 1,800 points after the opening bell, and the S&P 500 dropping 7%, causing a halt in trading for 15 minutes.
A lot of people are panicking.
Taking the biggest hit, oil prices, which plunged 30% Monday as concerns grow over a dispute between oil-producing countries like Russia and Saudi Arabia.
Because nobody knows how it's going to affect the global markets at this point.
Local financial advisor Brad Allen says 401ks will fluctuate in the short term, but it's the long-term impact people should be thinking about.
You just want to take a look at what you have. It might not be the right time to change anything right now, but you want to sit down with a financial advisor, somebody that can walk you through where you should be with risk, where you are right now, and how do you get yourself there.
Last week, the Federal Reserve announced an emergency rate cut to cushion the economic blow of the virus.
The biggest impact is obviously travel, leisure travel. You hear the stories about the cruise lines. International travel is collapsed. Domestic travel is being impacted now.
Bill Walker with Marquette University's Applied Investment Program says lower interest rates coupled with lower prices at the pump should drive the market back up.
With lower prices on oil, we just gave a tax cut to the consumer. With lower interest rates, since the lowest interest rates since 2008, we've also given the consumer another benefit.
Keep in mind, though, cheaper gasoline does wreak havoc on energy companies and countries that do count on petroleum revenue, including the U.S. Meanwhile, the Federal Reserve meets next week to potentially cut interest rates again.